Web3 is a huge topic around the world recently, and it's undeniable that Web3 is becoming more and more real. But why does Web3 matter, and would it matter, and what kind of paradigm shift would it bring along? All these questions will be answered by our industry pioneers, experienced experts in our current session. In this session, we have our moderator, Miguel, joining us from Dubai. Okay, welcome, Miguel. And also we have Mr. Steve Hoffman, who is a very renowned angel investor, chairman and CEO of Founderspace, joining us from San Francisco. Warm welcome, Captain.
Thank you. Fantastic to be here.
Thank you. And also we have Mr. Omer Ozden, our old friend of Disruptors Summit. Mr. Omer Ozden is chairman of RockTree Capital. He's joining us from London. Warm welcome, Omer.
Hi, Jenny. Great to be here.
Great to see you again. And also we have Mr. Frank Fu, also our old friend with Disruptors Summit. Mr. Frank Fu is angel investor, MathWallet co-founder, and Fenbushi Capital venture partner. Welcome, Frank, joining us from California. Good morning.
Hi, everyone. Good morning.
Good morning. Okay, so after this brief introduction, Miguel, I will give the floor to you. So everyone, please enjoy the discussion.
Thank you, Jenny. Hello, everyone. It's great to be here. And thank you so much to the team behind Web3 Disruptors Week for putting this together. It's important for us to keep in touch, even as the new pandemics seem to loom from around the corner. But we are here to innovate and connect and create a better version of tomorrow. My name is Miguel Francis Santiago. I'm a founder and CEO of the Future Is Now DAO. Subsequently, the media group that was the first company that arrived from that. We created the Future Is Now film, which is one of our roving crypto documentaries that goes around the world and covers everything Web3 since the beginning of 2018. And now, as we scale, we slowly get into trying to create solutions for global payment processing opportunities and borderless transactions with our venture called usdfx.org. And it's my pleasure to welcome Steve Hoffman, Omer Ozden, Frank Fu, amazing builders of the future who have amazing experience in creating Web3 dApps, wallets, startups, funds, and kind of do it all. I looked through the bios, and it's amazing to be with such innovators as yourselves, gentlemen. I would like to extend my first question to Steve in terms of Web3 funding and the capital that is being still amassed in the industry, even through this bear cycle that I think we're right at the end of. What is it like to be a Web3 fund? What does it take to be a fund of the future? What are some of the techniques or pointers that maybe you can exemplify to the audience?
So there are a lot of Web3 funds out there. Probably the most renowned, Andreessen Horowitz. They have amassed a huge amount of capital and been putting it into this space, into all aspects of the space. And they were pretty early on in leading the way. Lots of other funds, lots of angel investors I work with. You know, I run Founderspace, so I work with early stage startups in the space. I also work with lots of VCs who are investing in the space. And I will tell you, the thing about Web3 is it's always changing. So your fund thesis has to be pretty flexible about the types of startups you work with, the types of technologies you work with, where the market is headed. I can tell you, there are going to be lots of opportunities in the future. The innovation isn't going to stop. It is accelerating. More and more people are in the space. They're doing more. The capital is already allocated to a lot of these funds. So it's not going to go, the funding isn't going to stop. They have to put this money to work over the next 3 years that they've raised, sometimes less than 3 years. So that money is going to be deployed, and we're going to see it. The market's become more conservative. People are hedging their bets right now, trying to figure out, which opportunities are the best. And, if you're a fund manager, there's different approaches. So some of the big fund managers are really focused on momentum. They're focused on like where the trends are, which companies seem to have a lot of attention, are the highlights. And then there's other investors out there who are really focused on technology and technical innovation. They're going deep on the technology and saying, these people are really innovating on the blockchain in this way. We're really interested in what they're doing and the team. And then there's a third group of investors, which I usually fall into. And that is, I am looking, and investors like me are looking for core value, like which startups out there, entrepreneurs, are actually building long-term sustainable value for their customers. And there's two ways. There's one, building value within the Web3 community, tools and services for use within Web3. And then there's another, building value outside the community for the general mass public. And I'm looking at both those sectors. We seem to have lost him, so I will fill in. Oh, you're back. Great.
Yeah, lost you for a second, Steve. Well, what, if you don't mind, maybe telling us, what are you looking at right now in terms of opportunities out there? As we've seen a major swing happen with still to be unknown, right? The flux of this amazing, innovative market, as the rumor has it that Tesla exited most of their assets, and well, we had essentially, as a result of that, major companies like Celsius and major funds like Three Arrows and etc. just go under the bus. What are some of the risks out there that one can look at when running a fund, and is there anything in particular that you are currently looking at that has the properties of that you've mentioned?
So yes, so the risks are high. This is a very risky space. It's, people are in it partially because the risk and reward ratio really high. High risk, high rewards, like incredibly high rewards. That's why people are getting in. There's a lot, when I look at the market, I am trying to weed out the speculators, all the speculative opportunities, because there's honestly a lot of speculation going on. That's why we see companies like Three Arrows, just disappear overnight. The speculation is short term. Speculation is literally based on, I'm going to buy this because I know, or I believe other people are going to pay more for it in the near future so that I can sell it, not so that I can hold it 10 years or 20 years. And that's been rife in all of cryptocurrency. We've, tokens out there. Most of the activity going on around tokens is speculation. That's what people are doing. A few people, a smaller percentage of people are really focused on, building value both within the Web3 area and building value for customers, the general public. When I look at Web3 companies, I'm investing, I'm a long-term investor. So I always want a time horizon, like 10 years out. Is this going to be a huge company? Is this company going to make a difference in the world, right? If I'm going to put my money to work, my time to work, my reputation, I want to put it on assets that are going to be around in 10 years and that are going to have done something good for the world. So the speculative ones, they're short term. Like if you want to do that, if you want to, go to Vegas and gamble your money, be my guest. There's plenty of investments in the world that are speculative and people can chase them. I am looking at the fundamentals, and the fundamentals of any great company are the same. It doesn't matter if you're Web 3.0 or, AI, or, any other technology of the future that's coming along, brain-computer interfaces. What I look for is, how does this change people's lives? How does this fundamentally, if it's for a business, what can this do for my business? What does this do for the bottom line? Does it increase efficiency? Does it allow me to do things I couldn't do before in servicing my customers? Does it, get me more profit? What does it do? Get me more customers? These things matter. So when I look at Web 3.0, a lot of them I'm just discounting and say that I don't see what that's really doing for the end customer or the end user. And that they're going to want 10 years from now. And the ones that I see that provide extreme value in that area, then sure, Web3, to me, if it's a Web 3.0 company, they're using the blockchain, new technology to deliver this, fantastic. If they're using some other technology, I'll invest in them. Those are my criteria.
Got it. Well, I'd love to forward this next question to Omer, because of his background in creating merchant payment solutions. And again, I hate to steal the show, and I'm not, but we are building something that is to be a global remittance network of the future that's powered by crypto. And we've seen a lot of new regulations come into the space over this cycle as a startup. And I'd love to hear Omer's opinion. How does he see regulation evolving in this regard? Will this new regulation make it easier for crypto payments or harder? Because again, we are still at a tug of war here between the concepts of decentralization and centralization.
Okay, thanks, Miguel. So maybe what I can do is we take a step back. So RockTree is a merchant bank. We're a VC that invests our money, and then we work closely with the projects to partner with them to scale them up. And that our team is international, primarily in Asia and the United States. And so what we do is we scale up projects from the West and the East, and projects from the East and the West. And we're very early stage investors. So in terms of like merchant payments, we have invested in projects like this, but we're not super close to that area. But going back to one of your important questions that you asked Steve earlier, which is, what is distinguishing? How do you, funds and so forth? At RockTree, what we believe is that, particularly in Web3, that money is fungible. Like everybody has money. There's a lot of money out there. There are a lot of funds that have to deploy in a matter of 2 or 3 years, just like Steve had mentioned. And so you've got fungible money, but what value add can you bring? And so a big part of our thesis is we actually form a part of the team and add certain areas, capital markets and community development and market making in certain areas where a lot of the technology guys, they've really focused on the tech. They've done a great job in that. But then the other 360 degrees of creating a global protocol, they're not really that good at. So we do that. And one of the areas we do also help is in the legal side. So, you asked about a legal question in terms of regulation. Well, I think that regulation in this area really developed quite a bit over the past 4 years. And we've seen it, like, for example, in the United States, MTLs, MSBs, they just used old regulations for this and applied it to Web3. But then you have certain countries that have actually developed completely new regimes specifically for digital assets, like the UK and some other jurisdictions as well. And I think that the good thing is that the regulations, they can be used as a sword and a shield, in the sense that they have been used by certain governments to stifle innovation. We've seen that. And they can also be used to create a level playing field in an area where people can feel comfortable in participating, especially making sure that retail purchasers are protected and that institutions jurisdictions feel comfortable entering and, can represent to their LPs that, yeah, this is an area that's regulated. So we see a lot more regulation coming in that area. And point of sale payments, it's really fragmented. It's jurisdictional. So to be able to solve that problem, we've seen certain projects working on that, but usually they do it very specific geographic location. It's very difficult to do it on a global basis because you need to get licenses everywhere, not just everywhere, but even the specific provinces and states of the jurisdictions.
So what's your overall, outlook on regulation? We've seen the point where, they hated us, then they ridiculed us. Now they are sort of supporting us and coming in with us. And I'm talking about really the traditional sort of centralized solutions and centralized institutional capital, which is inevitable, right? But what's the name of the game? Do you feel that the future of regulation wants to allow for the concept anyway of decentralization to spread, or it still wants to tame it, limit it and control it at the end of the day?
So RockTree Capital has been very active in the regulatory side, particularly in China and the United States. And I personally have been in a number of meetings with Congress, with Chinese authorities as well. For example, during the Libra hearings, we were front and center with the Facebook team, and we had multiple meetings with not with the regulators, but with the government officials, the actual congressional members on both sides of the aisle, Republican and Democrat. That was back in October of 2019 and also in the summer of 2019. What I can say is actually it's jurisdictional based. It's not that everybody hates you or everybody loves you. It's highly competitive globally. And so something that's interesting is, for example, specifically at those Facebook hearings for Libra, basically the congressional members gave a kibosh to Libra, and they gave Zuckerberg a very difficult time. And you saw that day Bitcoin's price drop 13%. But then that evening, which was the next day China time, President Xi gave a speech that China was going to go all in on blockchain and support it. And he talked very authoritatively and intelligently about 7 different sectors where they would go in, such as finance, agriculture, poverty alleviation, food safety. And then Bitcoin zoomed back up another 15%. And so we see this from a regulatory standpoint and also a technology standpoint as a bit of a space race, actually. And very few incumbents like it, because the incumbents usually are tied to large institutions in finance, and that's specifically true in the United States. We've seen that. The regulatory framework in the United States is so complex that you have to perform all these gymnastics to be able to fit within the regulations, and they are difficult to deal with. However, those groups that have a strict or difficult regulatory framework will see brain drain. And America saw that, definitely. I mean, if you look at SBF and you look at some other entrepreneurs, they all went offshore. And so that's America's loss. And then that becomes Asia's gain, because a lot of them went out to Asia. And then, but you've seen certain jurisdictions in Asia, Singapore, maybe 5 years ago, Japan, and Malaysia and some other jurisdictions also take a permissive view to Web3. And then you see now some Western nations doing it too. UK, a number of other jurisdictions are opening up, Eastern Europe. But what I've noticed in the past 18 months, if I can compare it to, let's say, 2.5 years ago to the Libra hearings, is that Congress is now becoming much more intelligent about it in the United States, and they're starting to become more permissive too, because they do see this as either you allow this to grow and you could be competitive, or you fall behind 4 or 5 years and you're out of the space race.
Very well said. Frank, what's your view on this never-ending, exciting issue of regulation, and in terms of your background with actually contributing to Web3 in many aspects, but including, of course, the MathWallet? How was your experience with that, and what future regulation do you see happening in that regard with that product as it scales into a more an adoption space and use?
Thank you, Miguel. So first of all, I think a regulatory clarification is a good thing. We do need oversight. We do need a crypto law to make sure that the either financial institutions' assets or individuals' assets are protected. As you know, that there are a lot of scams in this industry. The blockchain industry is about transparency, fairness. However, it's just not the way it is. I think a lot of people are afraid of putting their money in the cryptos because of that. So from that perspective, it is a good thing. My background, so I used to manage Huobi US, which was a major crypto exchange platform. And so during that period, that was back in 2018, 2019, we worked a lot with regulatory agencies, including SEC, FINRA, and we also worked with a number of lawmakers, try to push this forward. So I'm very much in favor of the coming crypto law. I think that's going to open up doors to a lot of traditional money. And compared to the asset management world, crypto is very, very small. It's probably a fraction of the $87 trillion market out there. So the future is huge. MathWallet, however, is very different. I mean, that's at a micro level. We've been around for almost 4 years. We received investment from Binance as well as Alameda Research and Multicoin. Early investor was Fenbushi Capital. We believe that in the future, technology and application are going to lead the way, not the. I think today people are putting too much emphasis on financial transactions, payments, just finance in general. That's not what blockchain industry is all about. I think early in the conversation, you probably heard from other speakers that they believe in long-term growth in industry. So that's the driving. That's the drive. That's the engine. I think that you'll see better application. You'll see better technology, and that's going to drive the industry forward. I think that in general, regulators are behind the curve. So we have a lot to do to educate them, to provide the information to help them grow, to help them understand. And it's the educational curve is going to be long, but it's I think that's the beauty of it. We are in a very early stage of this industry. Therefore, everybody here in this in this era of the industry is going to be the leader. Back to you.
Thank you, Frank. Well said. What are some, and just to piggyback off of you and then go to the rest of the speakers, what disruptive changes to traditional business models do you see Web3 creating, and in what ways? Perhaps each speaker can please give his example of the future.
Well, so I personally believe these are the three things we can potentially disrupt. One is the privacy. Today, you see that everybody's information is all over the internet, right? Whether your credit card or personal identification, driver's license, or other personal credentials. sits on dozens and dozens of platforms, whether it's a shopping platform, e-commerce, or banking institutes. It's just not safe. And I see that the privacy protection is coming to this world, to this industry. So that's going to disrupt the traditional financial market as well as the privacy industry. And two is you no longer have to use your login email or ID and the password to get connected to the world. All you need is your wallet, and that's our belief, and that's why we spend so much effort on our platform. And just 2 weeks ago, we got ourselves listed as a trading asset on Coinbase. So that tells you that the wallet application is coming to the mainstream. And third is the traffic. Today the volume is very small compared to the internet and the mobile internet world. The blockchain industry volume, the traffic, and the subscriber base is very, very small. So we need a better user experience, and we need better protection to welcome huge user base coming from the traditional internet space. Back to you.
Thank you for that, Frank. Steve, perhaps you can also give your vision of the future and what disruptive changes, specifically Web3, will bring, especially to everyone out there watching. What's your vision of the future?
Sure. I agree with what Frank said. I think privacy is a big one. We're going to see, I think the wallets are very powerful, and a new way for people to use to log in and out, to do transactions of the future. And that's going to continue to grow. It's still a very small base. I also see a couple other areas where the Web 3.0 and the blockchain technologies can make a difference. So when I look out at it, I look at the types of organizations that can really, and the types of structures in society that can really benefit from a distributed system. So a trust-based distributed system. And honestly, most corporations are centralized. Most government functions are centralized. They're highly centralized, and they're highly centralized for a reason. People want control. If you think somebody like Mark Zuckerberg doesn't want to give up control over his empire, you're fooling yourself. He's always about, keeping central control of as much as possible under Facebook. So, and this is how corporations operate all around the world. But there are other types of organizations out there that can really benefit from decentralization. You look at open source development, open source developers. How do they get rewarded? How do they develop software? Can they do more as an organization? Can they be structured through decentralized software to do that? You look at nonprofits and groups like that. How could they potentially benefit from being on the blockchain and utilizing the blockchain? You look at political organizations, which are very decentralized. How could they restructure themselves with the blockchain? So trying to match a technology to how people already function, not trying to change behavior that is already out there in the world, is really key for understanding the potential of the blockchain. The blockchain is an amazingly powerful, innovative technology, but it does certain things well, and certain things it doesn't do well. So, other solutions, other technology, it's not like the only technology in the world. There's other great technologies that do centralization and coordination and things like that really, really well. Looking for natural applications for the blockchain is what I tend to do when looking out to the future.
Very well said. Yeah, so it has to solve a pain at the end of the day. And
yes. If it doesn't,
be useful in that.
It's a technology in search of a problem, which you never want.
Well, and hopefully give jobs as well. That would be.
Yeah, you want to create jobs. You want to solve pain points. You want to enable people to do stuff they can't do today that they really already want to do. Those are key.
Omer, and what's your view, and maybe some of the things that you're lately working on in terms of creating that disruption in the future Web3?
Absolutely. So I think Steve and Frank gave a very good overview from a philosophical standpoint, long-term projection. And I'll just add like one thing to that before I get into becoming more specific. And so from a long-term view, if you look at Web 1, and Steve and Frank may remember this, like it was basically read. You know, you had a static website, it was decentralized, and you just read it. And then Web 2 was write. You can actually participate in it. And then you had interaction. And unfortunately, that became highly centralized. And we saw, and then Web 3, the aspect of it that's important is now you can own it. You can own the protocol. You can own your own data. And that's really, that's the disruption right there. And so you can project that out into 5 years, 10 years, 20 years. I don't have the foresight to be able to think about what's going to happen in 20 years, but you know, we do have some things that we've looked at 5 years ago, and they became true in 2021. And you know what we're thinking about over the next 3 to 4 years are, you know, we're really focused on building the infrastructure for cross-chain. And we believe that we're already in a multi-chain future, but we believe that that's just going to be accelerated. Everything we saw with layer ones and their adoption will just accelerate and become a multiple through a multi-chain world. And so we've been investing in projects that are specifically a part of the Lego of this multi-chain infrastructure project called LeapFi, for example, which is really interesting. Another project called Golden Gate, which is developing a multi-chain under ZK rollup. We've seen other projects in the areas where we haven't invested yet, but we're looking at closely. Nomad, for example. People have heard of Wormhole, and there are other projects out there that just are building up this multi-chain future. And we believe we were big believers in that. We were big believers in different layer ones in the last 4 or 5 years, and now we're big believers in that part. Also, the related to that specifically, we love DeFi. It's very transactionally based, but again, to the analogy of building up the Legos, we're very much into DeFi, and we've invested in projects there. And then the other area which we find interesting, I think that's really going to be the big valuations, particularly the infrastructure part, and some middleware that we've recently. A project that we had is Pocket Network, which over the past year has gone from 2,000 nodes to 50,000 nodes. That's a US project that's allowing projects to run their own nodes and become highly decentralized. So this path of decentralization and allowing projects to become decentralized and not, the technology now is the level where it has parity in terms of speed with the centralized solution in Fura or Alchemy. And so, that's really interesting to us. And then another area is GameFi. We really like GameFi. We don't think that the valuations will be as high and the usage will be, but the usage could be higher in terms of the number of users, but it's not as sticky as infrastructure. And so one thing that we've been really careful of is a lot of the projects have had really short time horizons. We don't like that. We like to invest generationally. So what we're looking at is the merger of Web 2 and Web 3. We've backed some Web 2 projects where they are entering Web 3 and we're helping them do that. And just those games are a lot stickier and we can have a longer time horizon for purchasing a part of the protocol.
Well, right. I think the best question to ask any founder is, what's your exit strategy, right? To kind of understand where they stand on the long-term vision and do they really have a plan at the end of the day. Really great overview there, Omer. I appreciate that. And I think really it has to do with the hype cycles, right? We had the hype cycles of of certain assets, certain trends, right? As we got into DeFi, it had its hype cycle, then it started bearing the fruits during specifically, I think, the bear market of 19 to 20, the during COVID area. And now we're having this hype cycle of NFT and metaverses. And this is my next question. What do you feel as the hype cycle concludes and we start seeing some real solutions that are becoming enabled by certain jurisdiction, as we've outlined before in terms of regulation? Dubai specifically announcing its plan recently to create here a system in terms of really enabling the metaverses to function within some sort of a government-supported fashion. What are some of the solutions there, perhaps in this next hype cycle of metaverses and NFTs that you guys see out there? Please, Omer, perhaps right back at you.
So we've invested into certain metaverse and NFT projects, but we started investing into NFT projects going back like to 2018, and so we haven't scaled up as much. We're not just, this is just RockTree. We're not as bullish on this area as DeFi and infrastructure, and a part of it is because the application of NFTs, I think, still needs work. I think that right now, for example, JPEGs related to NFTs, just my own personal view, there's a little bit of tulip mania there. We've seen the valuations decrease, and some of it was driven by, younger retail investors making a lot of money and then just spending it. And so that's not what we're looking for. We're looking for long-term growth and technology. And so, but one area that we're very bullish on, we think will bring the next 500 million to 1 billion users into crypto, for example, is GameFi. Like GameFi, anything that we see as digitally native, we believe can easily come into Web3. So there's still being a lot of friction for Web2 to move into Web3, and a lot of it relates to the thinking of the Web2 developers, and sometimes it's linear and Web3 is more geometric. And however, we do see that like over the next 3 to 4 years, there'll be more of a convergence, and that's really what we're aiming for. What we like to do, RockTree's investment motto is like, we don't invest to where the puck is, we invest to where the puck is going. So we're trying to look out 18 months to 36 months into the future. If we could do that, that's not that easy. But we try to just think about what's happening in the future. So I think like what we'll see is we will see Web2 users being able to use Web3 without even realizing that they're using Web3. I think really that's where the convergence will happen. And that's going to happen over the next 20 years in various areas, and I think like, for example, GameFi, which is already digitally native, and a lot of young people who are open to learning. And, for example, a lot of them are in Asia, which are like, we find Asians are early adopters faster than Western markets. We see them adopting quicker from Web2 into Web3 in that space. And then there's other areas too. I mean, finance is a big one. Like we've already seen institutions and retail coming in because just profits are changing, are motivating people to start using Web3. But I think we're going to see it in a lot of other areas too. But starting with areas that are digitally native, and then when you extend it out 5 years, 10 years, 20 years, we'll see other areas moving into Web3 as well.
Great. Steve, what's your view on metaverses, specifically on NFTs? Like the hype cycle, again, right, perhaps has succeeded, maybe hasn't even started for metaverses, who knows? But, they say bear markets bear the fruits, while bull markets produce the BS. So what's your view on specifically those two phenomena in the world of Web3, metaverses and NFTs?
For NFTs, I think the value is for the average person out there is still pretty limited. So I think there was a lot of value created for speculators who wanted to bid these up. I think that certain NFTs built brands that can go beyond the NFT itself. So Bored Apes, you could take those brands, CryptoPunks, you could take those brands into mainstream media, other types of content, animation, games, all of that. So there's real value there. I think people just owning an image on the blockchain or saying they own it, the ability to say they own it when it doesn't really do much. Sometimes NFTs can act as passes to different activities, but you could have a pass without an NFT. I mean, you don't need an NFT to have a pass. I have a pass to my gym, and I don't need an NFT to do that. I could have an NFT, but I don't need it. So that there wasn't a lot of other value being created for people besides speculation, and then a few of the top ones building brands on their creative art that they actually did. I will say, the metaverse is an entirely different beast. And the metaverse has been around a long time. Let's not forget, like the metaverse has gone through many, many cycles, ups and downs. And so the metaverse, I think, is a much more complex thing when you're addressing it, now and into the future. So we look back, and there were big metaverses out there. Second Life was huge. So a lot of people, younger people don't even remember Second Life, but Second Life is still around.
As well be
World of Warcraft,
right?
All of these,
okay.
World of Warcraft, I'd call, it's a metaverse game, and then there's metaverse virtual world. So virtual worlds and virtual currency, whether they're in virtual objects, these have been around. These are ideas that are tried and true. When you put them on the blockchain, do they work? Yes, because they worked before the blockchain. They actually work, but this enables a new way for people to come in and buy them. And actually, the real value of the blockchain is trading digital assets. It's an easy way to create a marketplace for your digital assets, for your virtual goods that you have in there, for a virtual currency that you have in there that existed prior, to actually do that. Now, I will say that incarnations of the metaverse that people build virtual worlds. So you could take virtual worlds, and virtual worlds, honestly, they are limited. People don't engage in virtual worlds for long. They go in there, they're kind of a novelty, they have fun, but fundamentally, there's no game, there's no real gameplay in there. And there's no, people don't like to socialize just with strangers they met online. It's not something most people want to do. And online events in virtual worlds, they're okay. But people prefer Zoom and things like that, where our real faces are here. And also, it's much easier and quicker to get into and out of and navigate. So the value of virtual worlds is going to be limited. I mean, they didn't work in the past for these exact reasons that I'm giving you, and just putting them on the blockchain won't make them work, except for speculation. So we saw like Decentraland and Sandbox, things like that. But Decentraland, people come in and buy this real estate, but they're not hanging out in the virtual world doing much, right? They're going in, they're looking at cool stuff, they're buying it, and they're hoping to flip it. That's like why those things are active, not for the virtual world itself. So those types of metaverses, really tough. It's really tough to do social in these places. I know Mark Zuckerberg bought, Oculus and the whole thing to do social metaverses. Really hard, because you look at a fundamental application like, if you're on WeChat or you're on Instagram or Facebook, you're actually going in and out of those applications super quickly, or WhatsApp to chat with people really quickly, connect with your friends, maybe post something, and you're going back to your daily life. You can't do that in the metaverse. It's much harder to navigate. It's much harder to get into, whether it's on your PC or you have a headset. Totally different use cases. That's why it hasn't really taken off for social. There are fundamental reasons that you have to look at, which have nothing to do with the blockchain. So simply putting them on the blockchain isn't going to change these facts. What I am bullish about is gaming. I think gaming is huge. We already know, it's, billions and billions of dollars are spent on gaming. People spend inordinate amount of time in games. The fact that people want to acquire these virtual goods, these digital assets, and the fact that they could then sell them. We saw this with World of Warcraft before the blockchain, people out there, grinding away, getting these, upping characters levels, getting these assets, magic swords and stuff, and then flipping them. There are whole businesses.
I was one of them.
Yes, there you go. Before the blockchain just makes it better. So that there it adds real value. We're definitely going to see a use case.
Very well said, Steve. Yeah, when we see the solution to take your loot from one metaverse to the other, which is actually a project we're advising, but when we get to see more of that, perhaps people will see more of the value behind upgrading this very well said, an existing world already, or an existing industry of the metaverse already. Frank, what's your resonance to metaverses and NFTs and the bull cycle / the build cycle?
Thank you for the question. So I think NFT is overrated at this moment. There's no real world application. Well, I shouldn't say that. I think that I do know a few companies building the application based on NFT concept. However, it's not quite there yet. I agree with Steve that it's still speculation. And you probably noticed too, especially in Asia, people are speculative versus Silicon Valley. I think the young entrepreneurs are more focused on building the future technology and application, better product, better user experience. So that's the difference. Now, talk about the NFT and the metaverse. I do think that first of all, it's coming. So today you hear a lot of buzzwords, but when people use buzzwords, they try to hide I think they try to hide the fact that there's no real meaning. There's no real application. And if you do see technology building a better future, then you don't have to use the buzzwords to explain those things. You can just use the plain words to explain. For example, all right, we know machine learning, but what is machine learning? So people call it artificial intelligence now, but it's been there for centuries. Excuse me. So same with regards to metaverse. I think the first real application in metaverse is going to be social media based on mixed reality, not just a pure game, not just a pure headsets, and certainly nobody is going to be using the Facebook type of Oculus devices. It's just a cumbersome. It's not easy, and it doesn't create a very, very friendly user experience either. I have seen a few very talented companies from Stanford and Berkeley building the social media-based mixed reality products. I think that we're going to see the launch in the next 6 to 12 months. So that could be very interesting, and that could disrupt the industry. In addition to that, I think in the metaverse, privacy still is very important. Private financial transaction is going to be the key. I know a fact that, for example, there's a company called Espresso System built by 3 very talented Stanford PhD students, and then they've raised over $30 million for their little startup in just a Series A. So that's a fantastic application in the metaverse world. Back to you, Miguel.
That's true. Having the old Silicon Valley approach, 2 guys and a dog in a garage, truly focusing on the code. That's the essence of the product. And fortunate to be working with a few projects like this as well. I think just the concept of GameFi and within the metaverse and maybe competing for Bitcoin, right? Actually winning Bitcoin that's supported by a play to hash sort of a concept where the hash rate guarantees you the win, and there's a tournament every week and people get to actually experience this industry by getting into it and playing to own a little bit of Bitcoin to then understand how to use it and so forth. Like things like that are, I think, can have a huge effect on mass adoption and really enabling the fun way to do it. And I think metaverses and GameFi and maybe even NFTs absolutely as items, perhaps as weapons and things like that can be cross-verse traded. That's the good future that I personally see in these 2 assets. Well, I'm not sure if we're out of time. I tried to ping Jenny, but she hasn't replied.
No, here.
Hey, Jenny, should we do closing remarks with each speaker or introduce everyone once again and just close the panel? How are we on time?
I think we are still running quite late, so maybe before we go, if any of each of our speaker has something to add, some thoughts want to share, maybe you can just quickly say something before we wrap up the session.
Yeah, let's go to Steve. Steve, closing remarks, please.
So my closing remarks are, I'm always out there looking for great entrepreneurs. So if you want to reach out to me, just go to founderspace.com, founderspace, and, send me your business plan, especially if it meets the criteria I laid out. I would love to see it. And thank you so much for having me on the show, Jenny. It's been fantastic.
Thank you, Steve.
Yeah. Awesome. Omer, please.
Yeah, actually, similar to Steve, we're always looking for great entrepreneurs, great founders. That's what we invest into. And really our model is to look for the next decacorn. We've had some good ones that we helped on the last bull run, like the Graph and DYDX and some layer ones and also DeFi projects as well. And we're looking for more. We invest into teams. We really, the business model is important, but it's really the team that's the most important for us. And because a lot of these projects early stage, things change and things move so fast that sometimes you have to pivot. So RockTreeCapital.com, to the extent that you feel that you've got decacorn in the makes and you're a solid team. Thanks. Jenny, Miguel.
Thank you.
Awesome, Omer. Thank you for that. Frank, please.
Yeah, thank you, Miguel. And thank you, Jenny, for this fantastic opportunity. I can't believe that time really flies. It's been a year since our last Zoom conference call, such as this. So I won't say much, but I do want to say that please come to California. Let's build this.
Thank you. Cool. Thank you.
Well,
thank you. Thank you, Miguel. Yes, Captain, Omer, Frank, thank you for sharing about the Web3 Disruptors Week. I think as this industry is moving forward quite very, very quickly, and I do believe that our perceptions toward Web3, the stages in Web3 would be quite different as time goes on. Let's keep in close touch and hope that next time when we have such dialogue, each of us will have some more new thoughts. I really like it today, what you shared today. Very, very inspiring. I personally learned a lot from what you shared. Thank you very much, everyone. Thank you. Have a good day. Have a good afternoon. Have a good evening.
Jenny, thank you for the opportunity. I do just want to mention to check out thefutureisnow.community and watch us soon on Netflix as we finally signed a deal for our film to premiere on a worldwide scale. If you want to learn about Web3 and kind of see where it's taken us over the last 5 years, different corners of the world, The Future Is Now film. Thank you so much for the opportunity, Jenny, and thank you to everyone here, esteemed panelists, for the insight. And let's do this again sometime. This is great. Let's disrupt building the future. Thank you.
Great. Thank you.
Good day. Good.
Okay, bye.
Bye. Bye-bye.
Bye.
Bye-bye. Thank you, Omer.